Welcome back to Investinsight. If you're a beginner, the world of investing can feel like a minefield. You want your money to grow, but you definitely don't want to lose it. While the financial landscape is always shifting, the fundamentals of safety remain the same. Today, we're breaking down the safest ways to start your investment journey with confidence. The safety foundation. Before we talk about where to put your money, we need to talk about safety nets. Most experts agree. Do not invest a single dollar until you have an emergency fund covering 3 to 6 months of expenses. Currently, the best place for this is a high-yield savings account. High-yield savings accounts isn't technically an investment, but it's the gold standard for safety. Top rates often hit significantly higher than traditional banks, with institutions like Vero Bank and Adelphi. These accounts are insured by the Federal Deposit Insurance Corporation, meaning your money is protected up to $250,000. It's liquid, low risk, and currently offers returns that compete with many traditional bonds. Certificates of deposit. If you have money you won't need for a few months or years, look at certificates of deposit. Unlike a savings account, a certificate of deposit locks in your interest rate for a set term. This is the ultimate set-it-and-forget-it safe move. It is an ideal strategy if you want to guarantee a specific return regardless of what happens in the broader market. U.S. Treasury securities. If you want the safest investment on the planet, look to the U.S. government. Treasury bills, or T-bills, are short-term debts backed by the full faith and credit of the government. They are virtually risk-free and remain a staple for conservative portfolios, offering a reliable way to park cash while earning more than a standard bank account. The Standard & Poor's 500 index funds. For those looking for long-term growth with managed risk, the answer is index funds. Instead of picking one stock, you're buying a tiny piece of the 500 largest companies in America. Funds like the Fidelity Zero Large Cap Index Fund have an expense ratio of 0% and no minimum investment. Historically, the Standard & Poor's 500 has averaged a 10% annual return. While it isn't risk-free in the short term, over a 5 to 10-year horizon, it is one of the most proven paths to wealth. Conclusion. The safest way to invest isn't about finding a magic get-rich-quick button. It's about matching your goals to the right tools. Use a high-yield savings account for your emergency fund, certificates of deposit for known future expenses, and index funds for your long-term retirement. Start small, stay consistent, and let time do the heavy lifting. Don't forget to subscribe to Investinsight for more educational guides on your journey to financial freedom.